reflect on the market open in Asia, or otherwise known on Mondays as I told you, the Omar Najia I told you so webinar. And here he is with the platform. Once again, Omar Najia, all the naysayers could go home. You've told us where we're going, and here we are. Your thoughts on the doorstep of $80 a barrel?
Yeah, so I think basically, crude's moving up. It's just it's quite amazing. So everybody's surprised that we're coming up to winter. Because obviously after September it gets really confusing what months lie ahead. And then they're also surprised by stock levels. I mean, it's not like this stuff changes, kind of daily or by the hour or anything like that. And I was actually reading the Daily Mail online this morning. I loved it. It was like. On Friday,
take your life in your own hands there, I'm afraid.
I love it. It was like on Friday, it was like only 1% of petrol stations are out of fuel. And this morning, or whenever they wrote this, I looked at it this morning, it was like 90% of. But don't panic. There's no reason to panic. The army
don't
will bring
panic,
the fuel.
Mr. Humphreys. What was it? Exactly. That was his name in Dad's army. Don't panic, Mr. Humphreys. Don't panic.
Man, that's exactly right. So basically, it's like this Captain Mannering. So somebody's telling him like, "Look, Captain Mannering, we're coming up to winter. We didn't foresee that coming. There are no stocks in the forecast, and we're going to call it the army. But don't panic." And so, what's the market going to do? The market's going to panic. The market's going to panic. So this is what we're seeing. I think, my target for a while now has been like about $82 on WTI. Let's see if we get there. But everything is strong. It's not just oil. It's coal. It's cracked. It's products. Since they allowed the transatlantic flights, jet fuel prices, all of a sudden, everybody's discovered that there are planes and we need jet fuel, and everybody's coming into tender for jet fuel. And the other interesting thing is we trade also LNG here, and those cargoes now the value of those cargoes are like $85 to $100 million, and the value of all cargoes is going up because the flat price is going up, which means that if you want to finance these cargoes, it takes you, it's quite expensive to do, and with the banks having cut back on credit, it means that a lot of this, demand is going unsatisfied, and people are getting anxious because the banks simply don't want to give people or companies this kind of financing. So one cargo, $100 million, 10 cargoes, and what do you do? So it's going to be very interesting.
Let's welcome Kate Durian, Mies contributing editor and non-resident fellow of the Arab Gulf States Institute in Washington. Kate, how did we suddenly have a shortage? I thought OPEC Plus was carrying an extra 5 million barrels of oil and it could come on the market at any moment. They can't even meet their measly 400,000 barrels a day of extra supply.
I think we've been warning about this. I mean, it's a sort of compounded effect of 2014, 2015. We said that we were going to see maybe supply shortages. And don't forget, 2020 was the year when, people couldn't conduct proper maintenance. You had, staff that had to be pulled away from projects. So I think, we're seeing that. And now we've got this, the double whammy effect of COVID-19. So I think we're in for a period where I think now supply is going to be an issue because demand is coming back. Some people say it's going to come back to the 2019 levels by the middle of 2022. And OPEC and IEA, I think, see it coming back by the end of next year. So from what we used to say was, it was demand issues, it was demand pull that was determining. Now it's more supply. You've had hurricanes, you've had climate events. And as Omar was saying, he did predict $80 and that wasn't that far off. I mean, I said it would hold over 70 because of market fundamentals. But yeah, it is surprising that the likes of Algeria, Nigeria, Angola aren't able to meet their new quotas. You're not seeing a surge in production from the other countries, from the countries that have the capacity. So I think we're in for a reasonable supply tightness, a period of supply tightness.
Let's welcome Bill Spindle, Council on Foreign Relations International Affairs Fellow in India, also the former South Asia Bureau Chief for the Wall Street Journal. Bill, welcome to the table for the first time. We have, over the last year, had India moan and groan quite a bit when oil prices were at $60 a barrel. They're being incredibly silent in recent weeks and months at $70 to $80 a barrel. How do you think India will absorb this scale of oil price and possibly even higher, given the fragile recovery?
Yeah, Sean, hey, thanks for having me on. I appreciate it. It's good to see everyone here. India is obviously incredibly dependent on these oil imports. They were vocal earlier. I think they decided that didn't really get them very far, being so publicly vocal. But obviously, higher prices are going to really pinch the economy there, which is already pinched. Going into the COVID crisis, it was struggling with the two COVID waves they had, especially the second one. It really got crushed. It's coming back now, and I think they're just focusing on that at this point and just trying to lay low in terms of broad public global statements. I don't think they think they're going to talk the oil price down
anytime soon. In terms, Bill, of their transition to other energies, obviously India have been on that path for a while, perhaps not fast enough. Where does the transition or the access to non-fossil fuel-based energy help them at this moment now that fossil fuels are at these high levels, both on gas and oil?
Yeah, I'm not sure it helps them a whole lot right now at all. I think we're looking down the road. To pull back, I think really what's really interesting, you look down the list of your headlines that you sent out this morning, is just this extraordinary group of sort of short-term and really long-term things that all of these markets are trying to digest. On the China side, they're trying to figure out Evergrand. Is there going to be a financial crisis like this minute? And if not, which seems to be the general consensus now, what's going to be the long-term impact of a sort of restructured economy there when the real estate market, if all of this hits the real estate market over the long haul, and China has to kind of rebalance its economy without the sort of liberalization and reform that we had previously thought was going to accompany that rebalancing of the economy. So what does that mean for China growth? Then on the US side, you've got everybody looking at Biden's two gargantuan infrastructure plans that Nancy Pelosi is going to be trying to push through the House this week, and this debt ceiling craziness that we all know how it's going to end. But between the two of those, you raise questions about sort of how functional is or is not the U.S. government going to be going forward. And then on top of it all, you've got these a month left to Glasgow, which isn't going to impact markets, particularly energy markets, this week or next week. But at the end of the day, it is going to provide us some measure about how determined the world is going to be, at least in talking about, and how comfortable it's going to be talking about pushing forward an energy transition that is going to, over time, really cut into demand for all fossil fuels. And that's kind of where we are with all of these things. And India fits into that in the long-term picture. I can talk a little bit about its longer-term transition, what they're hoping to get out of them for what Kerry essentially is hoping to get out of them going in. Yeah, go ahead.
Omar, on that point that Bill presents, and particularly the Evergrand one, the black swan event, ultimately, you talked in your opening comment about all things are predictable. I mean, it gets cold, you need energy. But ultimately, this market's fragility to the black swan event, only a week ago, the potential of the Evergrand collapse and the contagion of that did sort of have the headlines, dramatic as they were, China Lehman. But how fragile do you think this market is at this point to a black swan event, or is it much more resilient given the demand outlook?
No, I think two things. One, the Black Swan event already happened, and two, the Evergrand thing is something that the West is trying to blow up. A Lehman's moment. It's nothing of the sort. It's basically $300 billion, and the Chinese could get rid of it like this. So put Evergrande. They tried really hard to spook markets, didn't work. I don't think it's going to work. Maybe some people bought when the market went down on equities. I have no idea. But Evergrande, I personally think it's not at all relevant. I think it's hyped, so to the side. The problem, the black swan that we have had, and basically people haven't noticed, is to do with renewables. So basically energy, if you need, not if you need, but the things about energy, one, it's got to be, cheap. It's got to be reliable. So you got to build in redundancies. If this doesn't work, you go to this. If this, blah, blah, blah. It's got to be transportable. You got to send it from one place to another. And on all those fronts, renewable energy fails completely. It doesn't just fail, it falls, straight, face first down, face planting. You can't, because it's so expensive, you can't have it, you can't build redundancies into it. And you can't transport it anywhere, and you can't store it. So what are you going to have? These giant batteries that that don't work properly. You've got to build like gigantic ones. And you can't transport it because once you make the electricity, using renewable fuels, whether it's renewable fuels or solar or whatever, you can't send it anywhere, because if you send it over really long distances, you lose, 20% of it through cables and all the rest of it. You can't ship it. You can't do any of the stuff. So its energy density is also, not great. You can, put a can of gasoline in your pocket and hopefully not smoke. But anyway, so the bottom line is it's not cheap enough. It's not reliable. There's no redundancy. You can't transport it. You can't store it. But apart from that, it's great. And everybody's going to move.
Apart from that, it looks good on the horizon. Kate, your thoughts on that point? Because ultimately, it's coming right at you in the UK at the moment. We've had wind up to 40% of power supply, down to under 10, back up again, and now we've fuel shortages at the petrol stations. Is Britain in an energy crisis? What's your take on all of these developments?
Hey, we're talking cold turkey for Christmas, right? I mean, people are worried about it. It's not just my filling station closed down a few days ago. The wind wasn't blowing. You've got low stocks of gas in Europe. The Russians aren't supplying more, but then they also have their own internal storage to think about and ship more to China. They are meeting their commitments, but they're not going beyond. They are, you've got China also dipping into its stock. So I think it's a combination of factors. But yes, I think we're in a reverse transition because, the shortage of gas means that people are burning liquid fuels. You've got coal coming back, possibly, when we're supposed to be phasing it out. And I think all this talk, sort of going up. And I think you put one of my insights in the agenda for today, in the news item, is basically everybody's burnishing their environmental credentials ahead of COP26. But if you look at the reality of where we are today, you're not going to. Yes, you need all energy sources in order to meet your climate goals, but you're not going to do it immediately. So in the meantime, we're witnessing this shortage and, having to find alternative fuels because, as Omar said, we don't have enough storage. You can't transport the stuff. Yes, it's cheap to produce solar, and then what? So I think we are in this spiral, it's and the China thing, I think, is more psychological because China is the driver of global economic growth. If anything happens in China, there was worry about a contagion effect. But, you look at the pictures of, empty apartment buildings that could house several states in America. So I think that was overblown, but I don't think it's like the financial crisis of 2008, with the ripple effects across the global economy.
Bill, are we witnessing the revenge of Houston, the revenge of ExxonMobil? It only seems like a few months ago when the COVID pandemic was an accelerator for the energy transition, putting the oil majors on their knees, more or less. Now the narrative is shifting. this transition is jeopardizing energy supply. Is that a false narrative, do you think? What's your opinion on that?
No, I don't think it's a false narrative in the sense. I certainly wouldn't say that the energy industry was on its knees back then, but it was certainly on its heels. And we saw some significant sort of changes in approach. I think Omar's very succinctly and accurately summed up the current situation as you try to go through and get into this energy transition. There is no question, as we're seeing in Europe, although most of the issues don't directly involve energy transition issues, some clearly do, and that's going to be the thing that people see as the new thing here and the scary thing. And so you do wonder what the public sort of reaction to all that is going to be. All the things Omar said are true in the sense of short-term transitioning, the next 10 years, maybe even more. I could certainly and won't now, but have a longer discussion about how these things have been underestimated over the longer term, and how most of these issues are in fact going to be worked out over time. But it's going to be a bumpy ride, and everyone's starting to realize it's going to be a bumpy ride, and that's going to definitely lead politicians certainly to a bit of a rethink about how fast they want this to go, or whether perhaps they want it to go at all.
Omar, this sort of acceleration or elevation of the oil price vis-a-vis where we've marched in recent weeks, significantly aided by the sort of momentum out of the disruption in the Gulf of Mexico from Ida. I.e., if Ida hadn't happened, maybe we wouldn't be surfing this high. Your thoughts on that, where supply tightness really is right now? Or is this a moment, because of a rare event, it will balance out into the fourth quarter? Or are we going into a tight window over the winter?
No, I think basically things don't happen. Things don't happen like that. It's not, if everybody was sitting around looking at news stories and saying, look, Ida happened, therefore it's going to go up, or Ida didn't happen, therefore it's going to go down. So it's the same with the Evergrand thing that you mentioned before. So what that does is it scares people. So markets are all about, greed and fear, right? They're not about counting stuff on one column and the other one and then saying, it's about greed and fear. If you go in and you buy something, you've got to be confident enough to hold it for it to go back up, because nothing goes up in a straight line. Same with Bitcoin. So over the last week, basically, Bitcoin was rising. And then China says, we're going to ban Bitcoin. So market drops. Everybody's like, oh, my God, blah, blah, blah. And then what happens? Fear dissipates. Natural trend resumes and Bitcoin goes back up again. So it's about sentiment. It's about risk appetite. It's about greed versus fear. And right now, again, when you tell markets, don't panic, everything's going to be okay, whatever, then greed takes over and fear takes a back seat. And when everybody gets way too greedy and everybody jumps in and it's only one way and up we go and all the rest of it, all of a sudden fear takes over and we come back again. So I tend to view it more as kind of, sentiment driven, as opposed to a specific thing to do with Ida or sorry about that, to do with Ida or I think it's basically,
right.
The market is the market. Stuffs are happening at the periphery, and it's just making people more fearful or more greedy. And I think, if you look at the Fed, every time they say they want to taper, the market knows that they're not going to taper, and everybody says, well, we've got to wait. And then greed takes over again, and up we go. So until you've thrown everything at this market in general, equities, Bitcoin, commodities. You've said, COVID. You've said Evergrand is gonna whatever. You've said, we'll never go back to, demand isn't coming back. All this stuff has had absolutely zero effect, and so the underlying trend is there in all of them. What you're talking about is how far it retraces before going up again to break.
Well, ultimately, it's the set. You can throw everything at the Fed printing press, but don't bet against the Fed. All of these things are a tidal wave. Kate, should OPEC Plus get greedy, as Omar is mentioning the word, i.e., is 400,000 barrels a day enough? Should they calm this market down a little bit, or will it burn out and, kill demand as a whole?
Well, maybe Biden was right when he called on them to increase production more than the 400,000. But I mean, even that they're not able to bring on the market. So I don't know. It just means that, the likes of Saudi Arabia, the UAE will have to act as swing suppliers. And they don't particularly like to do that, but they probably will. Russia says it's going to be at record levels for next year. But if you look at other countries like Kuwait, for example, their spare capacity, their capacity is now at its lowest in 10 years because they've delayed so many projects. Kuwait may be a special case, but we have to come back to the UK situation. It's not just about a gas shortage. It's about Brexit. It's about lorry drivers not being available. We have a deficit of about 100,000 drivers. So they're talking about bringing in the army. So no panic, but so it's supply chains, and I think it's affecting all commodities. You've got climate change, which is affecting hydropower. So hydropower is really low. So you're getting a disruption. I mean, we always said the transition was going to be disruptive, but 2020 meant that all these predictions of demand have had to be revised. Now we're getting a supply situation. So as demand is picking up, supply is not matching it. So at the end of the day, as when I was at Platts, would say, at the end of the day, it is about fundamentals of supply and demand. That is what, plus a bit of psychology. But so you get, Hurricane Ida, you get supply chain issues, you get lack of investment, and you need to invest just to maintain production capacity, which hasn't been done in several countries. So I think that's where we are at the moment.
So it's really $100 oil, not 80, that we should be probably thinking about. Let's get the survey question up. The word out of Singapore this morning, for those of you inside baseball, APEC kicked off this morning, as Kate mentioned, her former place, S&P Global Platts APEC conference, virtual blended or whatever the word is, in Singapore today. And the commentary out of there is that global oil demand will be seen reaching pre-pandemic levels by Q1 next year, not middle of the year, but there's voices now out of APEC, all of the greatest minds of the trading and whatever business, saying early in the year, not later. So my question to you is, do you agree with that or disagree? Global oil demand back at pre-pandemic, i.e. 100 million barrels a day by Q1 2022. Agree or disagree? Get your votes in. Bill, your thoughts on that from the point of view of demand tightness and the oil price coming back to these elevated levels, let's just put it like that, at this time when the Fed is trying to taper and economies are trying to recover. Is there a collision here, or can they all coexist?
I'll leave the price equilibrium targeting to the experts there. Yeah. But I will say, you guys are drawing a really compelling case for our market that's pretty constrained on supply side for a lot of reasons that are, if they're not long-term structural, they're certainly medium-term structural issues. And yeah, I mean, I do see demand continuing to pick up because economies are going to continue to pick up. I just don't, again, barring some sort of black swan, another virus mutant, various things like that, it does seem like demand, people are increasingly determined to get back to the way they were living, and that's going to lead to significant demand in a lot of ways.
But Asia,
constrained supply.
Bill, Asia remains vulnerable given the low vaccination rates there. We've got India at 15%. We had an interview today with the senior energy official in Bangladesh. They're basically a single digits, 180 million people in Bangladesh. Asia remains quite fragile to any twist in the COVID tail.
Yeah, I think that there could be another mutant strain. There could be another giant wave. I think other though than some of these countries like China, where they really do respond into Australia, for example, where they respond instantaneously to even a teeny number of cases with a gigantic economically, troubling response, even if it's good in the sense of healthcare. I think that, but beyond that, I just don't see I see demand picking up. People want to get back to their lives. They're getting back to their lives, and that's going to increase demand.
Omar, some closing thoughts on where we go this week. Are we going to break through 80 on Brent today? Where is WTI behind it? Can it even get to 80?
Yeah, sure. I think WTI is going to get to my first target for WTI is 82.60. So yeah, I think WTI gets to what happens today doesn't really, who knows, or what happens even this week. The problem is you have to make a case for selling. And right now, there is no compelling case for selling apart from, it's really high. So I think, when markets see or when traders see somebody kind of, helpless and on the floor and putting their hand up, for help or don't panic or whatever it is, they don't help it. What they do is they all come and they start kicking the hell out of it. So I think basically what you're going to see is people come and start to kick the hell out of markets, which means basically driving them to the upside, which means kicking them while they're down, which means panicking when they tell you not to panic, and all that kind of stuff. So at some point, eventually, I'll start looking above 82.20 basis TI. But again, what happens this week, or if we see a pullback before or whatever, that's, in the lap of the god, so to speak. But trend-wise, direction-wise, higher.
Do you think, just on that point, Omar, do you think the global economy can handle that price? I mean, at some point, does it knock it over, or where is those 2 points connecting?
So inflation is running, depending who you believe, anywhere in the West, anywhere between 4 to 6%, okay, dependent how you measure it and all the rest of it. And oil prices and energy prices are part of that. So basically, just on the basis of that, if you look at the price of oil against the price of pretty much any other asset class, from, whatever the price of Google or the price of Bitcoin or the price of whatever, oil is, very, very cheap. It's extremely cheap. Oil trading at $80 or $100 or $200 or where it's incredibly, cheap. So no, I don't think, and don't forget, consumers have massive amounts of money in their pockets because of like this COVID stuff. So not spending, but what do they call it? Discretionary spending funds or whatever it is, can easily cope with, prices of oil, being considerably higher. Prices in supermarkets are going up, blah, blah, blah. So, the kind of suggestion that oil will be the first one to whatever, maybe people cut back on their digestive biscuits. They go for a plain one rather than a chocolate covered one before they cut back on,
I will never do that. You can rest assured, you can sleep easy to know that will not be happening here. Kate Durian with the last word on, let's get the survey result up and see what the mood in the room is. A 2-to-1 support for this market tightening quicker than we had previously been thinking, back to 100 by the first quarter. Where does OPEC go, do you think, Kate, to manage this, or they just stay on the sidelines with their 400?
They haven't been saying much. They're supposed to be meeting on October the 1st. But all this shows how difficult it is when you do have this massive shock to the system, as we had in 2020, and we're still feeling the ripple effect of predicting, demand patterns, because you can't, because you've never been in this situation before. So I think, it's very easy to say, yes, it might come back, but then we've been changing our demand forecasts. So I think the demand forecasts were lower than they should have been to start with. And I think now we're realizing that, the damage from Hurricane Ida is far more extensive than we thought. Shell is saying that one of their facilities isn't going to come back until 2022. You've got refineries, and then you've got stock levels, inventories. They have to be filled up at some point, maybe not this year, but early next year. So I think that's, and you're coming into winter with stocks at such low levels. And if you look at commodities, energy, gas and LNG, they're all at historically high prices. So I think that whole thing, the whole energy complex is up and is likely to stay up for a while unless OPEC says, okay, we're going to do something. But Sohail Mazrouri says we're going to stay the course. They might tweak it a little bit, but then what do you do with the ones who can't meet their quotas? So I think they're in a bit of a bind. Iran's not coming back anytime soon. So I think there's a lot of unknowns on the supply side.
Well, I suppose if they can't add, then maybe shale and others will be happy to do so at $80 to $100 a barrel. For further thoughts and insights on all of this, join us tomorrow at our own version of our APEC conference. We're going to be doing a 2-hour workshop tomorrow with all the guys of Fujairah and the whole shipping, trading, storage side of things. So join us at that. Log in tomorrow, 11:30 UAE time. In terms of outlook, we've had Evergrand with that big boat that blocked the canal some months ago. As Omar said, they've thrown everything at this market. We've had Evergrand. So if you come across anything that's ever G something, perhaps third time will be and it might be a moment to sell. Well, who knows? But Ever G, I think it's the theme. Keep an eye out for that. Not Evers, but Ever G. That's a wrap. Bill Spindle, thank you so much for joining us on this clown show. Hope you'll come back. Omar Najia, as always, great to have you Monday mornings. Kate Durian from London, no better voice on the oil markets than Kate. Thank you all. We'll catch up with you soon again. All the best.
Okay.
Thank you.
Bye.
Thanks, Sean.